PPG Industries. Ticker symbol is PPG, and it's in the business of chemical manufacturing, but specifically paints, coatings, and specialty materials. So from the website, they seem to cover aerospace, automotives, industrial coatings, packaging coatings, protective and marine coatings, and traffic solutions, as well as the specialty coatings and materials. So at the moment, PPG trades for about $160 per share. It's based in the USA. It's in the basic materials sector, and it manufactures and distributes a range of coatings and specialty materials. The company has two segments, which are performance coatings and industrial coatings. The performance coatings segment includes the refinish, aerospace, protective and marine, and architectural businesses. The industrial coating segment includes the automotive original equipment manufacturer, or OEM, industrial coatings, packaging coatings, coating services, and specialty coatings and materials. The company's brands include PPG, Glidden, Comex, Olympic, Dulux, Sikkens, PPG Pittsburgh Paints, Mulco, Flood, Liquid Nails, Psycho, Renner, Taubmans, White Knight, Bristol, Homax, Decorol, Trilac, Gory, and Bondex, among others. It also provides pavement markings and traffic safety solutions with products including traffic paint, hot applied and preformed thermoplastics, raised pavement markers, and intelligent transportation systems. As well as these, it also manufactures coatings for industrial and automotive applications. Currently has a market cap of $38.43 billion. Its PE ratio is 28.21. Its revenue is $13.83 billion. Has an earnings per share of $5.74, and its current dividend yield is 1.46%. PPG Industries pays a dividend 4 times a year, and the last dividend I received was for 46 cents per share. Its current quarterly profit margin is 7.87%, and over the last year is about the same, 7.66%. Its quarterly debt to assets, 71.5%, and annually is about 71%. And its annual cash flow from operating is $2.11 billion. From investing is negative $1.45 billion. And from financing is negative $59 million. Over the long term, the stock appears to be falling from a bit of a peak. Has a current 52-week high of $183 per share, and a 52-week low of $123.50 per share. At the moment, it trades at about 160. So it's very hard to know with stocks that have growth like this. Appears to be very nice and consistent. This goes back to 1981, where it was $2.56 per share. But it's hard to know what direction it will go when a stock falls from a peak like this. Because I'm sure that if people here on this peak, after this little drop here, August of 2015, I'm sure half of them would say, oh, it's going to go up, and half of them would say it's going to go down, but it seemed to have traded sideways. And it has now boosted. That's lockdown, 20th of March. And it's now it's fallen from all-time highs, but seems to have been falling from a bit of a peak. So it's very difficult to know what way it will go. And as far as dividends go, it's not fantastic, 1.5%, but it's certainly not bad. But I don't know myself about getting in at such high prices. If it traded sideways for another while, I'd be comfortable jumping back in. The dividend history. This goes back to 2013. And up until 2015, it was at 61 and then grew to 67 cents. And then it looks like it was pretty much halved. And then from then continued to grow. So I'm not sure why the dividend was halved, but it could have been something like a stock split where you will end up with twice as much shares. If you have one share and they do a stock split for 2 shares for every one, you'll end up with 2 shares that are worth half as much, and the dividend will also be halved. So upon further investigation, that seems to be what happened. 2-for-1 split. So I'm going to do a separate video on stock splits and consolidations. But if you don't know what they are, basically will turn one share into two, or consolidation will turn multiple shares into a smaller amount. But in 2015, that was its 467th consecutive dividend payment, which is very impressive, and from the history we can see that it's growing. So despite the high prices, certainly not a bad investment. So it depends entirely on your own strategy. But if you are purely a dividend investor, 1.5% is not fantastic, of course, but it has just had a huge run up in the last year. So if I was to invest in this company and it plummeted, I would have no problem putting more in. Now they have 47,000 employees almost, multi-billion-dollar market cap, and about 470 consecutive dividend payments, and that was in 2015. And we can see from the history that the dividend is growing along with the share price. Personally, I just think a bit too expensive at the moment, but the other side of the coin is that if you wait, it may never drop down to the price that it is now. Somebody who say invested here might think that they might say, "Oh, I'll wait for a discount," and it may never, even here, say it will never drop to that price again. But it's entirely up to you. Personally, I would rather wait, because I wouldn't want to put or have a large position in a company that pays 1.5%, because it's not really ideal, but that's just my own strategy. But that's all for this one, and I hope that this was useful.